What's driving markets? Welcome to Market Take. Each week we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Devan Nathwani, portfolio strategist at the BlackRock Investment Institute. This week we unpack how megaforces are reshaping long-term investing outcomes. Markets are being reshaped by multiple intersecting megaforces. The scale and direction of their long-term impact isn't clear. That's why it's crucial to revisit key calls and focus on underlying economic drivers over asset class labels in our view. Today, we see markets caught in a cross-current of megaforces. AI is front and center with Nvidia's quarterly results last week showing the AI build-out spending spree rolling on. At the same time, the software sector sell-off marks a new focus on sorting out perceived AI losers. Geopolitical fragmentation also came into the spotlight as the US tariff regime is again in transition. These forces have the potential to not only change the makeup of economies, but even their trajectory. But no one knows the ultimate end state. We see several possible scenarios with very different return outcomes. For example, AI productivity gains could lead us to an unprecedented breakout from a 2% trend rate of growth. This could also fail to materialize, and further geopolitical fragmentation could dampen global growth and drive up risk premia for US assets. We've evolved our capital market assumptions, which are for professional investors only, to address this challenge. First, we revisit the biggest portfolio calls more often as new information arrives. Second, we focus on the fundamental economic drivers rather than asset class labels. Think of the AI build-out. It cuts across public and private market asset classes with opportunities in listed and private infrastructure, as well as real estate and private equity. We need a more granular approach to portfolio construction to reflect where megaforces show up. Third, we budget risk holistically. We see dispersion rising as megaforces power transformation. That strengthens the case for treating alpha as an explicit allocation decision, not as an add-on. We've evolved our views on a strategic horizon of 5 years or more. Today, our starting point scenario sees us favouring inflation-linked bonds as we expect inflation to rise due to the AI build-out and settle above pre-pandemic levels. We see this build-out increasingly being financed through debt issuance resulting in wider credit spreads. Yet we lean into high-yield credit as it has attractive income and is less sensitive to interest rate shifts. We also favour infrastructure. It lets investors play the AI theme without making a call on the winners of AI adoption. Here's our market take. Today, we lean into inflation-linked bonds and high-yield credit on a strategic horizon of 5 years or more. In private markets, we favour infrastructure which stands to benefit from rising AI adoption. For details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in. If you've enjoyed this episode, subscribe to Market Take wherever you get your podcasts.
This content is for informational purposes only and is not an offer or a solicitation. Reliance upon information in this material is at the sole discretion of the listener. In the UK and non-European Economic Area countries, this is authorised and regulated by the Financial Conduct Authority. In the European Economic Area, this is authorised and regulated by the Netherlands Authority for the Financial Markets. Reference to the names of each company mentioned in this communication is merely for explaining the investment strategy and should not be construed as investment advice or investment recommendation of those companies. For full disclosures, go to blackrock.com/corporate/compliance/bid-disclosures.